Think about a homeowner staring at a high electric bill and wondering if solar panels are worth it. The panels are the visible part, but the loan behind them can decide whether the project happens at all. Forbright is built around that quieter money layer, and today on the Cursor stocks, that's the story behind its IPO. Forbright Inc., ticker FRBT, is the company heading to the Nasdaq. The everyday version is simple. It connects people and businesses with banking products, then leans into lending tied to clean energy, home improvement, commercial borrowers, and online savings. The question running through this IPO is this: is the price describing today's bank or the cleaner energy bank investors hope it becomes? The company traces back to Congressional Bank, founded in 2003 in Maryland. It later became Forbright, with John Delaney as founder and chairman and Don Cole as CEO. That matters because this isn't a brand new finance app. It's a bank story with a political, lending, and clean energy identity wrapped into one public market debut. Here's what Forbright actually does. A bank takes in deposits, pays people interest, and lends that money out to borrowers at higher rates. Forbright adds a focus. It wants more of those loans connected to things like sustainable buildings, solar financing, business lending, and projects where money is the bridge between an idea and the work getting done. Go back to that homeowner with the electric bill. If the solar panels cost too much up front, the answer may be no, even if the long-term savings look good. A lender can turn one big payment into monthly payments. That's the hidden role Forbright wants investors to care about, financing the change, not installing the panels. The money engine is familiar, even if banks can look confusing. Deposits are the raw material. Loans are the product. The spread between what the bank pays savers and what borrowers pay the bank is where a lot of the business lives. If that spread is healthy and borrowers repay, the model works. If funding gets expensive or loans go bad, it hurts. Now comes the IPO, the moment a private company starts selling pieces of itself on the stock market. Forbright is set to offer 7.9 million shares, which are tiny ownership pieces of the company, and raise about $158 million. The offer price and full IPO valuation haven't been set, so the smartest thing is to respect that blank space. Companies go public for a few plain reasons: raise money, give early backers a path to sell later, and put the company on a bigger stage. Forbright's planned raise is meaningful. But next to a bank with reported assets above $7 billion, it isn't the whole machine. It's more like fresh fuel for a business that already has a balance sheet. The big number investors can see right now is the raise, about $158 million. For a regular person, that's enormous. For a bank, it's capital. And capital matters, because banks need cushions to make loans, absorb losses, and keep regulators comfortable. The headline number looks large. The question is, what kind of lending engine sits underneath it? The growth story is tied to two ideas happening at once. First, people still want competitive online savings accounts and loans. Second, clean energy projects often need financing before they become real. If Forbright can gather deposits cheaply and lend carefully into those markets, the electric bill story becomes more than a nice brand angle. The bull case starts with demand. Solar panels, efficient buildings, and business upgrades usually need money before they save money. A bank that knows those borrowers could become useful in a market where the project is easy to imagine but hard to pay for up front. That's why investors may see Forbright as more than a normal community bank. The second bull point is credibility. Forbright didn't just wake up yesterday and say it likes clean energy. It rebranded around that mission, added energy finance pieces, and, according to reporting, bought assets from Mosaic, a bankrupt solar financing company, in 2025. That doesn't guarantee success, but it shows management is trying to build around a clear lane. But here's the catch. Banks don't just win by finding borrowers, they have to fund themselves safely. In 2024, Forbright drew regulatory scrutiny over its funding model, especially its reliance on brokered deposits, which are deposits gathered through outside channels instead of loyal everyday customers. According to reporting, that order was later resolved, but the concern still teaches investors what to watch. This is the financial reality scene, and it's different from a software IPO. Revenue is the money coming in before expenses, and profit is what's left after the bills are paid. For a bank, investors also watch deposits, loan losses, capital levels, and interest margins. A clean full-year revenue and profit snapshot isn't set here, so the honest view is qualitative. Banking quality matters more than branding. Competition is everywhere. Forbright competes for savers against online banks, for borrowers against regional banks, and for solar or home improvement loans against specialist finance companies. That means the homeowner with the electric bill has choices. Forbright has to offer attractive terms without stretching so far that the loans become risky later. The valuation tension is simple because the final valuation isn't set. Without an IPO price, investors can't fully judge the price tag yet. That matters. A strong story at one price can become a stretch story at another. So instead of pretending we know the answer, the useful question is, what price would fairly reflect the risks of a growing, regulated bank? Who gets the money also matters. The clearest hard fact is that Forbright plans to sell 7.9 million shares and raise about $158 million. If those are new shares, the money mostly strengthens the company. If insiders sell, more cash goes to existing holders. That distinction matters because new shares can help the bank grow, while selling shares mainly changes who owns it. After it lists, watch 3 things. First, whether deposits grow without getting too expensive. Second, whether loan quality stays clean, meaning borrowers keep paying. Third, whether the clean energy lending story produces steady results instead of just nice language. If those pieces improve, the story gets stronger. If anyone cracks, investors will notice quickly. So the balanced version is this. Forbright has a real bank underneath it, a clear, clean energy angle, and a founder story that gives it more texture than a random financial IPO. The doubt is just as real. Banking is regulated, funding can get fragile, and a mission doesn't protect shareholders if credit losses or expensive deposits squeeze returns. Remember the homeowner and the electric bill. By now, you can see the whole IPO story. Forbright isn't selling solar panels. It's trying to finance the choices around them, and investors are being asked to decide what that future is worth. Follow the cursor stocks for more IPO stories before they trade. This video is for information and education only, not financial advice.